Welcome to Inside the Vault Knowledge Hub. Join us as we answer all your burning questions, from precious metals to second passports and IRA investments. Each episode, we tackle a new topic and bring you insights straight from the experts. Let's dive in and unlock the knowledge together.
Welcome to Strategic Wealth Preservation's Inside the Vault Knowledge Hub. This is where we discuss all the things our clients have asked us over the years, outside of and including precious metals. From second passports to IRA investment, we will take a different topic each episode and bring you the answers from experts themselves. My name is Jeremy Varlow. I'm your host. Today we have a very special guest. Nick Giambruno joins me. Nick is the founder of the Financial Underground and a seasoned expert in international finance. Nick has spent years uncovering the hidden opportunities that lie beyond the headlines, helping people navigate complex financial landscapes. Get ready for an insightful conversation as we explore his unique perspective on global markets, economic trends, and strategies for protecting and growing your wealth. So let's get started. Nick, how are you today?
Doing great, Jeremy. Glad to be here.
Awesome. Great to have you. We're going to jump right into things. Your background and what you've built at the Financial Underground is a bit contrary in the way that you invest. Your approach to investing is to look for lucrative opportunities in overlooked markets. Tell us a bit about your framework and how viewers can be better at spotting these opportunities.
Yeah, well, I like to zoom out and get the big picture right, whether it's the big geopolitical picture, the big monetary picture, and so forth. So I focus on getting that big picture right and then drilling into different investment opportunities within that trend. Because so often I find other analysts, mainstream financial media, they just get the big picture wrong and everything flows from there. So that, I think, is the most important thing, and that's where I focus a lot of my work.
Yeah, it's interesting that you say that because in this day and age, there's so much access to information. People are able to, find answers to any question from a million different sources, it seems. I want to talk about risk management with your approach in particular. How do you identify, these overlooked opportunities versus what might just be, a bad investment overall?
That is very specific to the individual opportunities. And one way to manage risk is to look at your overall portfolio. And now that's going to be different for every single person because every individual has different circumstances. However, there are some commonalities. For example, everybody should have a foundation to their wealth. Your foundation to your wealth shouldn't be mining stocks or speculations or volatile things. It should be solid things like physical gold, real estate, certain real estate, and these kinds of things. So once you have that set up and established, then you can go down the risk curve and look at different things. So, that's a very important thing to keep in mind. But how do you identify different opportunities and that are good? Well, obviously that's very specific to each individual opportunity. And like I said, what I try to do is I try to get the big trend right, the big picture right, and then drill down into the best opportunities within that trend. And what that does is it allows companies within that trend to kind of ride the wave of the big picture and the big trends in motion, and that helps manage the risk as well, and can sometimes be more important than individual factors. So, for example, if gold is going up, it's the saying, a rising tide raises all ships. So I try to find situations like that.
Yeah, it's interesting. I want to get back to that building a foundation in just a second, but one last question kind of on your framework. You talk about the narratives a lot. You've mentioned it already in global finance, economics, geopolitics in your writing and the content that you put out, things like the debt, the dollar, inflation. How do those kind of, big macroeconomic things apply to your framework?
For example, you have different narratives around gold. A lot of mainstream people think it's a pet rock. You have narratives around geopolitics like Ukraine, like it's this bastion of democracy. And if we don't save Ukraine, we got to spend billions of dollars and spill all this blood. There's just so many stupid narratives, frankly. But nonetheless, that's what a lot of people believe. So the idea is to find the truth and go where the truth is, no matter what people say or think. You should never be afraid of following the truth. That should be guiding principles. So that's what I do with these with narratives in mainstream finance, narratives in geopolitics, and that naturally leads to investment implications. And I specialize in finding those.
Yeah, that's great. Thank you for that. And I implore anyone to who's out there watching to follow Nick and to subscribe to the Financial Underground to get some of those kind of counter thoughts to what we see in the mainstream media. I want to go back to what you just mentioned about building a foundation. You did mention precious metals and gold in particular there. Let's talk about investing versus wealth preservation at a time, right now when most asset classes are consistently reaching new all-time highs. How does one balance a portfolio to tolerate risk, but also protect and conserve wealth?
Well, it goes back to that foundation. I think that's the number one priority, is to get that foundation set up, because it doesn't make much sense to build a house without a good foundation. And same thing with a financial plan. You don't want to build a financial plan without a sound foundation. It's a recipe for disaster in both cases. So I think physical gold is the top asset in this equation for the foundation, and it has been for a long time. It's simply because it's just money. It's just, I always set people's expectations too. People think like it's, the expectation for gold should simply be wealth preservation. It's like what an old-fashioned savings account used to be. Think of it, gold, like that, because savings account, the inflationary monetary policies have basically destroyed savings accounts. People don't even know what they are. If you ask somebody under 30, I bet they don't even know what it is. A difference between a savings account and a checking account, for example. So that concept has been destroyed by inflation, and that's unfortunate, because savings is the basis of a healthy economy and a healthy country. So and a healthy individual too. If you don't have savings, how are you going to provide for the future? So I think gold fits in physical gold without any other competing claims. Now, of course, there's other nuances, like you don't want to own things where they have other claims like ETFs and derivatives and stuff like that. It's not really gold so much. That's a gold IOU. And there's a very big difference between a gold IOU and gold. And so you want to hold your gold with at the fewer amount of counterparty as possible, or ideally no counterparty. So I think that's how gold fits in there, because it's simply because of its unique properties, makes it a wonderful long-term savings vehicle, a wonderful store of value, and it has been like that for thousands of years. Now, what are those attributes? And in my opinion, it has all the characteristics of money. It's durable, it's divisible, it's consistent, it's convenient. But the most important thing is that it is hard to produce. That's what, to me, is the most important thing. Because if it's not hard, and how do you can measure, you can quantify something that's hard to produce, or it's called hardness. That's where you get hard asset from, hard to produce. So you can measure this, and it's very simple. It's just basically the new supply growth over the existing supply. So how big is the supply growing every year? So gold, anyway, it fluctuates between 1% and 2% of supply growth each year, which is insignificant. In terms of physical commodities, it's the lowest. So it's not the same as scarcity. It's a related concept, but I'll give you an example. So for example, platinum and palladium are scarcer than gold. There are fewer platinum and palladium ounces in the entire world. Why does nobody use platinum and palladium as money, though? I mean, nobody really uses it as a savings vehicle. It's because platinum and palladium are not hard assets, actually. They are easy to produce. The annual production of platinum and palladium is far higher than gold. Where I said gold is 1% to 2%, platinum and palladium, they basically produce the amount of above ground stockpiles every year. That's not a very good attribute for a store of value. If every year the industrial conditions can screw up, and that can affect its value. You don't want that. You don't want the changing industrial conditions to affect your store of value. I certainly don't. I don't want to save in something for the long term, 20 years, and every year it's going to have fluctuating value depending on the industrial conditions. That's why gold, 1% to 2%, who cares if the industrial conditions really change? Because it's meaningless, because the supply is the new supply is very low, and that's what I want. So that's what makes gold different than all other commodities, including all other precious metals. I mean, platinum and palladium, they're precious metals, but gold is far better suited for that role as the foundational asset, in my opinion.
I'm very happy that you mentioned platinum, palladium. We haven't talked about silver either. The other precious metals, where do they fit into a portfolio allocation? We're talking about preserving wealth when it comes to buying and holding physical gold. So, what is the reason behind buying silver, platinum, and palladium as part of your precious metals portfolio as well?
Well, I don't think the other precious metals have a role in the foundational long-term savings, quite frankly. I think gold is just the best, and why complicate it? Just use gold, frankly. The other metals, platinum and palladium, those are industrial metals. So if you want to speculate or invest on the industrial applications of those metals, by all means, that's what they're there for. Silver is kind of a mix. It's a mix of a monetary metal and a mix of an industrial metal. Gold is primarily a monetary metal. That's what I'm interested in. So silver has a monetary component, but in my view, gold is just a better long-term store of value. So what is the role of silver? If you want to speculate or invest on the underlying trend of what we're in gold for, which is the death of fiat currencies, which I think is an excellent trend. If you want to go further down the risk curve, not as a foundational asset, that's for physical gold, but if you want to speculate on this trend with some speculative money outside of your long-term savings, that's where I think silver, mining stocks, silver can play a role. But I wouldn't confuse it with the long-term savings.
Yeah, that's the perfect answer. And, it leads very well into my second to last question here. When it comes to portfolio size and allocation for your precious metals investment, do you stick to a strict number? Does that change, given market conditions, geopolitical, macroeconomic conditions, or do you have, a foundational number that you stick to as part of your investment allocation?
No, I don't, because every individual is different. It depends on many factors. So, for example, somebody who's very young has a very different risk appetite than somebody who's retired and old. Every individual is different. It's an individualized decision. It's not up to me to determine that allocation. It's up to every individual. However, I do say it is a foundational asset, and it should be the core of your long-term savings. Whatever that is, completely different for every person, but it should be a meaningful amount, no matter who you are.
Yeah, again, hit the nail on the head there. And I just want to conclude with one last question here, and this is in regard to Bitcoin. You talk about Bitcoin a little bit in your writings for Financial Underground. I'm curious, we see more and more metals investors that are, slowly acquiring Bitcoin as well as gold at the same time. How do you think Bitcoin and gold play off of each other? And what is Bitcoin's future potential, when it comes to something like government strategic reserves, around the world? That's, kind of being bantied about as an option a little bit. Where do you think Bitcoin goes from here?
Yeah, well, Bitcoin shares many of the attributes of gold, which is why it's referred to as digital gold. Most importantly, its hardness. It is the only cryptocurrency, in my opinion, that is a hard asset. Every other cryptocurrency is not a hard asset because there's a group of people that can get together and change the parameters. That's true from Ethereum on down. By the way, Ethereum changes its monetary policy more often than Jerome Powell at the Federal Reserve. It's not a hard asset. So no, it's more. Not at all in the same category. So I put Bitcoin in a totally different category than the rest of the other altcoins, which I'm not in favor of, frankly. Bitcoin does have that, and it is credible. Now, it's not the time. We don't have the time to get into it, but suffice to say, Bitcoin's supply is credible. And that's the whole thing. If somebody could change Bitcoin's supply, then it's not interesting. Then it's just a database and so forth. Anyways, that's what makes it different, that Bitcoin's supply is credible and that it has hardness. It has that attribute like gold. In fact, it's even harder than gold. Bitcoin's hardness, you can measure hardness. It's the new supply that comes on every year as a percentage of the overall supply. And Bitcoin's hardness is actually less than gold. Gold is like anywhere from 1% to 2%, and Bitcoin's is like 0.8%, something like that. It's actually much lower than gold's. So Bitcoin is an emerging, and it's a new thing. This is a new thing that people are wrapping their minds around. We will see, but I think in the marketplace for long-term sovereign stores of value, it's terrific to have more options, and this is an emerging option.
Yeah, and for anyone who is out there and is not too familiar with Bitcoin and the hardness and the scarcity that Nick has talked about, there are only going to ever be 21 million Bitcoin in existence. It is being mined every day, but once that 21 millionth Bitcoin is mined, that is it, and the supply is locked forever. So, Nick makes some really great points there, how that kind of compares to gold and how they are very similar assets. Nick, I want to thank you very much for joining us. It was great to chat to you, and I think some really insightful stuff. Anyone out there who's interested in learning more about the type of content that Nick puts out when it comes to alternative investing, crisis investing, and just looking for different narratives other than what we see in the media every day, please visit financialunderground.com, sign up for their newsletter. It's a great service, and we thank you very much, Nick, for being a part of the show.
Thanks, Jeremy. Have a good one.
You as well, sir. Thank you.
Thanks for tuning in to Inside the Vault Knowledge Hub. We hope you enjoyed today's episode and found it to be insightful. Be sure to subscribe and share your thoughts with us. Join us next time for more expert advice and answers to your questions. See you next time on Inside the Vault Knowledge Hub.